moments. They have the power to change everything. The moments we try something new. The moments we travel thousands of miles. In seconds. The ones that transform how we spend, how we save, how we build. The moments we connect and create memories that last a lifetime. The moments 300 million people say in unison, we want a better way. But the moments that really matter are the ones that come next.
Hello again. We're back for Rekt Vision. This week we have Sergio back. Great to have you, Sergio. We had OSF last week on Just the Drinks show, but it's good to have another familiar face.
Nice. Thank you for having me. Get the Mexican this week. You
Yeah,
can get spicy if you want.
Is that a Mexican jersey as well?
It is. It is. Wow. It's a Mexico jersey from last World Cup. It was a gift from actually from an artist in Web3. Sent to me. It says Sergito in the back and number 9. Pretty.
Now I don't know if this is like gonna annoy you, but Mexico have qualified for the World Cup, right?
Yes, we're hosting it along with the US and Canada. Yes. So we're not particularly good this year, and our goalie just broke his leg or something yesterday. So we might have Guillermo Ochoa, which has been like the goalie for like the last 6 World Cups. People love him, but yeah, it's probably not going to be a good World Cup for us.
I know, but the home matches would be wild.
Dude, they're so expensive. I really want to go, but they're just, it's Mexico, right? Like soccer, football is everything. And so it's actually an interesting thing. This World Cup, there's 48 teams instead of 32. It's the first time they expand the field. And there's just like some weird group stage matches like Curacao versus Germany. I think hopefully the product's not too bad on the field. But yeah, I'm excited. We're doing Meebit stuff with it as well. So it's a good year for football. It's always hopefully brings the world together, which it feels like we need a little bit of that this time.
It does. There was obviously a flare up in Mexico recently, but this week it's been more of a flare up in Iran. That situation seems to have been getting more. Well, I don't know if it's just not dying down. Let's put it that way. We obviously had the initial strikes and then continued kind of airstrikes, of which there does seem to be some form of military superiority, let's say. But Iran seems to be playing a game more against economic damage that they can do. And it's obviously going after the Strait of Hormuz, targeting Gulf nations as well as oil and gas fields. And it feels as though both sides are somewhat digging in, and the market about this time last week was hoping for a quicker resolution. This does feel like it could go on for a little bit longer. What's your take on it all?
I think it's interesting. Crypto has kind of like held up better than stocks. It also makes me wonder if the crypto sell-off at the beginning of the year was actually people just kind of like front running this. We've seen the current administration in the US kind of have some problems with information leaking ahead of time. Clearly seen in of Polymarket and other prediction markets. So I do wonder if, as preparations were ongoing, we did see like the movement of military hardware out to the Middle East and all that stuff. That's public. That you can track it. There's accounts that track that across the internet. But I do wonder if especially the Gulf states that have accumulated so much crypto recently, people got the heads up that was going to happen, and that kind of like led to some risk off in crypto first, which now leads crypto performing quite well versus stocks. Such an interesting thing. As far as what's happening, and I think it's just the history of humanity, right? Like every single time there's armed conflict, things last a lot longer than anybody I think would expect or want, especially when you're considering the loss of life that's being experienced, especially like innocent lives. I think Iran was 45 years of really just not being attacked for I guess like a reason, and that's precisely the Strait of Hormuz and the ability of them to choke just the flow of oil to the world. So it is a bit I mean, if you get political, depending on where you stand, it's not surprising that the U.S. went in without a full plan for it. It appears, but if you just remove the politics aside, I mean, I think it's quite clear that the conflict might last a little longer, just given the fact that it would probably take troops on the ground for the U.S. to be able to guarantee the flow of oil through the Strait. So, yeah, I feel like maybe we're just gonna have to wait a little longer for things to settle down. But obviously, like the underlying conflict, between Israel and Iran, it's a demographic conflict that's gone back hundreds and hundreds of years. So yeah, it's kind of difficult to predict what humans in power will do, especially when there's so many egos involved too. Like on the U.S. side, when you had Department of Defense Secretary Hegseth today, literally saying on a press conference, like, "Hey, the Strait is open, except for the ships that are being shut down." So kind of like just crazy personalities right now, and then just a sad chapter again when obviously loss of life.
Yeah, I was of the view that it was going to take a little bit longer, just because although Iran seemed to be losing kind of the military battle, they would probably want to cause as much damage as possible so that this doesn't happen again, and they can kind of push these levers quite a lot. You just never really know though, because the rhetoric from the administration and just random headlines is like, "Oh, we're about to make a deal," or "We're very close to it," or "We can stop it whenever," and then other people are saying, "Oh, well, no, we can continue to do this for a long, long time." I don't know. One thing I know about Trump is that I can never really predict what's about to happen, and I know he does a lot of brinkmanship. So maybe maybe something's really close, and maybe something isn't. This is definitely going to be one of the longer conflicts that we've kind of seen under his
Yeah, I was thinking this morning. I was walking my dog, getting ready for the show. It reminds me of the China trade war. Remember that? We'll call it like chapter 1, or what was it called? Stage 1, back in like 2018, which was like the big trademark issue around. It was that and the wall with Mexico, but really like the China trade deal was a thing. And we had back then, there was like a couple of guys on Twitter from like Chinese news sources that would just drop headline bombs to like really mess with the stock market, and then Trump will like say something else, and it was just like obviously like the battle was being fought different places, right? It was not like a battlefield like it is today, but it was this back and forth between both sides really trying to have an impact on financial assets in the U.S. I feel like it's a little different now because obviously oil is such an important thing, and now you're even hearing like stories about SIBO pretty much just warning Secretary Bessent to stay away from like the futures market, not try to interfere there. Like that's just like very complex stuff that if it does get out of control, obviously Iran, obviously they're very, very heavily outmatched when it comes to military power, but not just the US, but obviously the allies. But we've also seen so many times through history again when smaller combatants have nothing to lose per se, they'll go to the last mile. And this Strait situation is just such a critical point that if they keep on doing that, they could really put pressure on financial markets and the U.S. economy. And obviously, at some point, the midterm math starts kicking in. Obviously, that was already, the House was pretty much all decided it was going to go to the Democrats. Like now you're getting Senate in play. You're seeing prediction markets pricing 50-50 with the Senate being taken by the Democrats, and what that opens up now for other things. Like you're starting to think of like third order effects, right? Like what happens with crypto legislation, so many of these other things that were assumed to be safe under even a divided Congress. And I think that's when it gets interesting. So yeah, the longer we go with no certainty of the outcome, I think the much more complicated things are going to get under the surface. I think the sell-off in stocks, led by like software and AI stuff, like pretty much always make a case that maybe it was a little overheated. But as things in the economy continue to deteriorate because of the price of gas, then it's a whole different story.
Yeah, I think underpinning a large bit of this stock market rally has just been the supply of cheap energy, and that being critical. And this has probably changed a lot of that. I do think Iran obviously is going to face pressures of its own. Like China as well won't be doing great if this scenario continues, and they are the main export partner. So I think there will be. That's why I also think that they will both come to the negotiating table. But I think, yeah, I just think that they wanted to cause a little bit of economic pain before that happens. So I'm still bullish on this being resolved. It has been an interesting week for crypto because we've been trading somewhat independent of macro. It feels like the correlation just seems to just not even be there. We've just kind of formed this base at around 70K on Bitcoin and around 2,000, let's say, on ETH, and we just seem to be going up and down and around that sort of level. Today we did have a rally. We went up to around 73.5K, I think, on Bitcoin. So decent day. And then we're back down about 72 now. It has been, in terms of the flows, it's been interesting to see in particular that gold has started to be underperform and Bitcoin started to outperform. And you've seen actually the ETF flows of those have also turned. So you've started to see outflows from gold ETFs and inflows into Bitcoin ETFs. Do you think this is a good rotation? A bunch of banks were saying, this is the time. JP Morgan, I think maybe one other, maybe Stan Chart, was saying, that they really like that rotation about a month ago, and we're starting to now see the start of it. Do you think that trend could continue?
Yeah, probably, right? Like, obviously, crypto's down massively over the last 6 months, and gold has had a really good performance. So, not surprised to see some profit taking there. Also, think crypto this last couple of weeks has really shown kind of like it's like two reasons for crypto to exist that actually work in the real world. One is, heard so many stories about people trying to sell their gold physically in Dubai before leaving the country to take their wealth with them. Obviously, it's hard to either travel with bars of gold or in a local spot market. I think it's trading down 20% from spot. Versus obviously with Bitcoin, you can just bring your ledger with you on the plane and that's it. So that's one, I think, good story for crypto. The second one is Hyperliquid, being open over the weekend. People like Bloomberg and like banks referencing where oil was trading on Hyperliquid. I remember back in our Barclays days, having to write those weekend emails around the China trade deal and all that stuff, and there was not a lot of good resources as to where markets were. It was maybe a weekend Wall Street website and so on, but obviously without real skin in the game.
Go into that a little bit. Like when we were both traders, like often over a weekend, if something flared up, you'd have these hundreds of people on email chains around different things, trying to price where things would open, and then there'd be updates from all the traders when they went live on a Sunday night, and it would be like this ongoing commentary throughout the weekend. It now just feels like Hyperliquid's just there, so you can kind of see what stuff is large. I mean, liquidity is lower, but it's definitely trading.
Right, and it's it's a 2-year-old chain, 1-year-old product. Like it's really, I think the crypto story is quite promising, right? Like sovereign wealth that you can take with you, right? No custodian, one, and then two, like the ability to trade 24/7. I think even on this show in the past, not been like super bullish the whole tokenized stock situation, but stuff like Hyperliquid being able to trade macro or narratives when the traditional markets are closed. I think it's a good story for crypto, and I think you see it reflected in the price of the Hyperliquid token itself. So in that sense, yeah, if you're sitting back and you're seeing gold kind of like have had a good year, same with silver, some other like precious metals. Obviously, oil's having an incredible start of the year for different reasons, but if you were long commodities, you're having a good start. It might make sense as you see the use case for crypto majors play out in real time under this types of circumstances. Then yeah, that in my opinion, creates some sort of maybe we should allocate to it again, and that's why maybe like Ether and Bitcoin are performing better and hype than some of the other alt ones, and way better definitely than some of the other more like vaporish stuff that might not really have that intrinsic utility to it.
Yeah, Hype has been the best performing L1, and obviously we speak about a lot on this chain on the channel. It's the platform of choice, really. doing huge volume, more than Coinbase, for example, on perps. Spot volumes are large, but there's nowhere near the size. So it's definitely built for perps. And this week it hit 37, which is an FDV of 37 billion. I think it's still single digits in terms of current valuation. But I was looking at it before we went live, and I just thought it was interesting that it's now getting close to where Solana is. If you compare the two on an FDV basis, Hype is around 35, 36, and Solana's 55, 60. That was about a 3 to 4 times different not too long ago. And now it feels like those two are getting closer together. What is your view on that? Do you think that this move away from L1s as just their valuation coming from the activity on the network, and you kind of somehow viewing them as currencies at the same time, versus Hype as this, right, we make money by a single app, but there are a few others, and we earn the token with it. Do you think there's a path for both of these still to have a lot of value? Do you think Hype is now starting to show that why it's the better model?
I mean, if you look at what 2 or 3 years ago, when Solana really kind of like led us out of the broader bear market on the back of the narrative of was it on-chain capital markets? I mean, I'm sorry to say it, but it didn't deliver. Right? We had a bunch of casino stuff, which is part of the crypto PMF. Pump Phone is a $1 billion annual revenue rate. That's incredible. As a testament to that team, and obviously the appetite that there is people to speculate in those types of launches. But the reality is, it's not really what institutions and the actual bigger capital is going to chase. And then you look at Hyperliquid, going back to the whole largest per platform, it works. Kind of like they had a really good distribution, I think, of the token early on, which I think it's important, sets you up for success when it comes to token performance, and just completely taking over the narrative of on-chain capital markets, like where that stuff is trading. So yeah, I wouldn't be surprised that if or when Hyperliquid steals that narrative from Solana, pretty much like Solana stole the narrative from Ethereum 3 or 4 years ago. I think it's a very parallel situation where Ethereum was supposed to be smart contract platform, and then its gas issues and stuff led it to lose a lot of that mind share. And Solana came in and was able to prove more of a better playground for those types of initiatives. And now you're seeing that obviously with Hyperliquid. And yeah, I would not be surprised to see that close. I think also Solana maybe has lost a little bit of its its voice. I really haven't seen anything from Solana that is markedly different from anything offered on other chains. Again, you did see that last, I don't want to call it last cycle, but maybe it was last cycle 2 or 3 years ago versus Ethereum. Now you have pretty much the same announcements. Okay, there's payments, there's stable coins, there's tokenized IWAs, but nothing really differentiated like you see with Hyperliquid. So yeah, I'm not surprised, and again, I would definitely not be shocked to see that be like a trade that really gets highlighted as we go through the year.
Yeah, I think Hyperliquid for me still feels like the best long. It's one of the ones where whenever it dips, I just look at it and go like, right, this just feels like there's buyers. It's interesting to me that the other perp platforms have not done as well, and I've been trying to work a bit around this, like Lighter and Aster. Those coins are up, but not up that much. And I think it's probably just the liquidity. I think that's the main thing here. That kind of like a stock exchange, right? You need to be where the liquidity is, and I think playing the smaller venues is just like nowhere near the valuation potentially of the bigger venues. And there's been some incidences around like ADL and liquidations on some of these other platforms, which just show that like liquidity is not really strong. You're kind of nowhere.
Yeah, I haven't looked at their tokenomics either, but spent a lot of time this year analyzing token distribution and tokenomics and stuff. And I do think that has a huge impact on price performance. And I think the market, maybe it always knew it, but now it's really starting to come around to like, hey, like some tokens are not going to perform because of the structure that they have, right? Like there's tokens that obviously at the 1 year lockup expiry mark, they really start underperforming. So not too familiar with those, but I think that's a good place to also start looking at. Versus, I think the liquidity argument makes a lot of sense, and yeah, that's definitely probably the biggest reason. But I also think that when you have teams potentially or large early investors looking to monetize their investment, and it does it's been like a year of Aster, maybe a little bit less.
I mean, Aster gets a lot of flack, obviously because it's kind of pumped by CZ. I don't know if you saw this week, but he was actually named one of the richest men in the world. They revised his net wealth above 100 billion, so now he's overtaken Bill Gates, despite crypto being down 50%. But he clearly has helped champion that alongside a bunch of other things. But I just feel like I've been wondering why it's Hyperliquid and nothing else. Like with the L1s, it's always like, right, we have it's ETH, and then it was the ETH killer, and then it was the Solana killer. But for Hyperliquid, it feels very concentrated as a play on perps being big. And I've been trying to get a better sense of kind of why. Because I think a lot of burn going on.
Of the people that I consider smart, the group chats that I've been added to, you get added to all kinds of group chats, right, over the years. Some are like just fun, others are like friendly, and then there's like some really high signal group chats that maybe are not as active. But I've definitely, over the last 2 years, call it, hype is usually the one that gets brought up a lot from a very constructive place, and people that are like, okay, when the big sell-offs happen, to your point, like people will come in and bid it. So that to me has always been a signal as well.
Yeah, they got some very, very big traders involved in it. So that's really helped. Like the smartest people are kind of bought into his success. And that was really good. It's not just like CZ gave, but is making money from this. It felt like some of the smartest people in the industry were making money from this. But that's kind of been my main takeaway in terms of altcoins this week. Just like to see that outperformance on a week like this, and like you said, it went mainstream again. It's gone mainstream quite a few times, but just like when it's getting quoted on Bloomberg of like where oil is over the weekend, you just think it's just staring you right in the face. Like this is the trade. Someone said to me on a podcast this week, I just feel like when we go into the next bull market, hype is going to be trading at 100. He was like, it's going to be like Solana.
I wouldn't be surprised.
Solana was trading at in 30s, 20s, and then then it's just started to be the chain of the next, and it just feels like that's the one. And although that's I don't want to get people already to 100, but it does just feel like there's just buyers. There's just always buyers of that one compared to some of the others.
If you think of narratives, right, which is our big part of markets overall, let alone crypto, I think hype had its Polymarket moment this last week, or over the 2 weekends where people were referencing it across traditional established media, financial media, trading desks, and so on, as the source of truth for what was happening on the weekend. And that's happened to Polymarket leading into the election, and you've seen the re-rating of their valuation and other prediction markets as people just really accepted them as, again, the source of truth for markets that priorly there was no real place where you could see where things were actually trading. So for me, it's that type of moment, right? To your point, yeah, there's been big traders in them, people that did really well farming it, and obviously, of course, they're going to love it for the rest of their lives because they made so much money from the from the airdrop and so on. But it's really, when you look back at has it really pierced through to kind of like more of the mainstream? And I think hype just did that this last couple of weeks.
Exactly. Like when it starts to go mainstream, that can be kind of the change point. Like Solana meme coins going mainstream was like, right, well, this is just going to go absolutely insane. Same with like when NFTs start to go mainstream. Like when you start to see that, and I guess it's not the first time it has, but it really felt like a key moment where everyone is looking at financial markets. It's like, wow, like billions of dollars of volume is going through an oil in this market over a weekend. And we've just spoken about what that traditionally is like for most traders. Like
that weekend email is like, it was a really good point, right? That you made. Like, yeah, you were sitting there in like a thread with everybody, head of markets, everyone, all the way down to like the junior analyst on the desk, trying to figure out what things are going to be. Like, I can't imagine this in the past weekends. It's like just Hyperliquid, like levels, like nonstop.
If I was managing the risk, potentially I might even go on to Hyperliquid, right? There's been some talk this week about how prime brokerages are now hooking up all these hedge funds to prediction markets, and I think that's very easily the next stage of that would be to do this for perp dexes as well, right? Like if they're setting you up so you can trade event contracts on Kalshi or Polymarket, then I think it's quite a short hop to just being like, right, well, also set me up with a Hyperliquid accounts, because sometimes you kind of wanted to hedge on the weekend, or you knew there'd be great trades if markets were live. There's a reason why Trump is doing this stuff on a Friday night, because volatility is not there in traditional markets. But if they are now trading on Hyperliquid, like traders will be drawn to that for sure, massively.
I'm so happy I'm not on a sales desk anymore, man. When I was in FX at Goldman, we worked like all freaking week except for like Saturday when things were happening, and then like Brexit. I'm so happy. I'm just playing with my JPEGs now.
Yeah, it has been. I think on the like more esoteric stuff, I haven't really seen a lot of things outperforming. We've seen punks and NFTs kind of drift lower. We've seen most meme coins kind of drift lower. There was a week this week, quite a lot of the top movers were in this AI meets crypto sector. We saw VVV. I don't know if you've seen that.
Yep.
Which seems a little. I kind of think that's got a kind of a use case to it. If you're gonna be able to pay for API calls for the LLMs with this token, I can kind of get why that makes sense. Do I think it's worth billions of dollars? Maybe not, but there's actually a use case. A lot of the others were kind of they're AI meets crypto, which if you say to anyone in crypto, they're like, oh god, what has been pitched here?
I feel like those moves are just the same, like captive capital that's stuck in crypto and people just chasing themselves around. And I mean, good for them. People that know how to time it, get ahead. I feel like all of that is very insiderish. So just happy to sidestep all of that and keep my eyes on the ball.
Yeah, top gainers over the last 7 days were Grass, Render, Tau, Pi, FET. These are OG crypto meets AI names, which have got a real mix of utility.
You know what, Render I do like. I mean, I haven't looked at it in a long time, but we definitely have spoken to that team a lot. And I think their use case is very interesting, because what happens is, obviously with the price of compute going up dramatically with everybody using AI and the chips and all that stuff, when you are creating images like we are for Meebits, right? We're creating content, we're like doing drops, and so we now have obviously a very large compute spend, either locally on our machines, or we have to go to somewhere like Render where we can get cheaper compute that's distributed. So that's one that, and for people that are kind of like geeky and curious about use cases that actually we are using it in the real world, and I think that's interesting. But personally, I've not looked at the token. I don't hold the token, and I probably won't have time to go in and figure it out. But it is, again, for anybody that's listening that wants to kind of understand some of the use cases, I think that one is it's an interesting one.
Yeah, I remember Render was one of the ones that NFT people got involved with a little bit, just because, like you said, rendering of images is important, and a lot of the graphic designers in the space were like, oh, this is like the thing. In terms of other stories, we kind of had DeFi away from hype not having a great story over the last 24 hours, which was there was a wallet yesterday that had $450 million in it and went to buy $50 million worth of Aave in a single ticket on his phone. He ended up getting $135,000 of Aave, or something along those lines, maybe 150. So he lost nearly $50 million in the process, of which part of it was also taken by an MEV bot, which I think made a profit around $10 million, this MEV bot. I don't really know what to say about that. The founder of Aave came out, and he's been taking a lot of flack recently, and was like, this just proves that we should, it's still important to have DeFi, and that, it's people shouldn't get involved. But it does feel pretty wild that mistakes like that can happen to people in DeFi. I think a lot of people assume just like DeFi's good, CeFi's bad, well, centralized exchanges are bad. But like, you look at a story like that, and you go like, oh, like how can somebody lose that amount just trying to buy some Aave?
So many layers where things went wrong, right? Starting with the user. Why do you have $50 or $450 million in a mobile wallet? Like, what are we doing, man? Two, even though there was pools, obviously with much better liquidity, what are you doing buying $50 million worth of, Aave token in one go? Like, that's so definitely enough user error, but then obviously compounded, to everybody's point, like, why are we letting these types of trades happen in like the dark? It reminds me of like the dark forest, when people refer to like DeFi as the dark forest back like 4 or 5 years ago. Yeah, I mean, obviously you can make arguments for, well, should have known better, and should have been more protection. But that's a tough one because we don't know what happened. I mean, was the dude drunk at a party trying to impress a girl? He was like, "Oh, let me just show you how DeFi works." Like, I like, what leads you to do that type of trade on a mobile wallet when there's so many resources and tools and just better execution, like, like doing it on a DEX, like so many things. So yeah, I think I don't want to blame it on the user. They should have got better experience, but I think they bear a lot of the responsibility for even putting themselves up to a position where an MEV bot can extract so much value away from your trade. And obviously, the routing and so on the protocol side obviously could use a little bit more work if we're letting people do this.
Well, CowSwap, who's behind it, said, "Hey everyone, we're aware of a large swap transaction circulating on X. Based on what we've seen, there's no indication of protocol exploit or otherwise malicious behavior. The transaction executed according to the parameters of the signed order. Our interface always shows clear price warnings for shops of this magnitude, as does Aave's. We're continuing to review the details." I don't know. Everyone's trying to kind of claim that it's all the user. It's just not a great story, I feel like, for DeFi.
It's not a great story. I agree with you.
From also trading, like the amount of fat fingers that you would see trading, and you'd spend the next 3 days trying to fix whatever massive error that, like, I was a trader and we would do, to put in perspective, I didn't trade that liquid a market, and we would probably trade 50 to 100 times a day, maybe on the higher end. And every day you'd get emails from previous trades that you'd done the day before, 2 days before, and then if it's really bad, it's 3 days before, of errors that were done during the process that need to be fixed. Like, the amount of errors during trade processes is wild. And this is someone who had like proper risk systems for everything. It does seem like this sort of stuff is not fit for even non-professional use.
But then again, like at that level of capital, like, how do you get to 450 million in a wallet and not have, to your point, right? It's not about centralized or whatever. It's just like proper risk management to where you end up putting yourself in that position. So yeah, I think just all around, just a bad story, to your point. And hopefully the protocols learn from it. And I don't know, it's hard to say, hey, prohibit it if it's, decentralized, but make the error and message, like disclaimers, much bigger, click 15 times, or do a CAPTCHA or something. Because that just, it should not happen.
Yeah. Yeah. Hopefully we get some better stories around that. We did see that. We did see also that the Clarity Act, which I think me and you were talking about last time you came on the show. That one, the story has slightly gotten worse this week as well. It feels like, or at least it's very changing. You speak to some people and they're like, "Oh, it's going to happen." You speak to others like, "It's never going to happen." Kind of bring it back to your original story. It does feel like this. If the midterms are going to most probably now swing more towards the Dems, I don't know how this if this war resolves in a different way, and you can see a bump on the back of that, but it does feel kind of like now or never, and you don't really get the sense that it's now, right now. The odds for it, I think, when we went on the show were pretty high, maybe closer to 70%. It's now down to around 60. And to be
Still
honest,
high.
it's got to happen in the next month, doesn't it?
I
So
mean, we have a partial shutdown of DHS. We have a huge impasse there. I think the Democrats are very empowered to continue to just do everything they can to not let any parts of like the agenda go through, and obviously the crypto stuff is a big part of it. The crypto stuff, you can make an argument that it gave the Republicans a big win across different races. I don't know that they really swung the presidential race, but definitely some down ballot races with like representatives and senators. And so, yeah, I mean, it's become so political now that it's hard for me to see how, now that the Democrats are so empowered to take over the House and potentially the Senate, to have the appetite to give the concessions that they would have had to maybe be more competitive earlier. I mean, I'm hoping that it passes. Like, this stuff should not be political, but unfortunately, we've chosen in this country to make every single thing political, and obviously crypto definitely has a component where it leans much heavier to the GOP. But yeah, I mean, I think, listen, the GOP lost the Latinos in Texas, where I'm from, South Texas. Right? It's the first time where the counties around where I grew up voted for a Republican president. And the funny thing is that the district, the redraws that they did this year to try to maintain that advantage in the House of Representatives actually counted those votes as Republican votes. But everything's pointing towards those votes going back to being Democratic. And so it won't, I don't think it's even going to be like a tight Democratic lead in the House. It's probably going to be a significant one where you can lose members on more like the middle of the road votes and still kind of be able to do what you want if you're on that side. And so hopefully it passes. I mean, 60%, it looks high to me. We're like just looking at the political environment today and like how everything just seems like a ticking time bomb.
We had the writer for Decrypt, who's based in Washington, and is after Trump came in, he gave a number of different publications White House access, and Decrypt is a very well-known crypto publication. He came on and said, "Look, I think this is like 15 to 20." He was shocked at how high it was. He was like, "What I see from both sides is like them drifting away." And again, you have brinkmanship with all of this, and maybe the administration can force them into some form of a room around this. But I was shocked at how downbeat he was about everything. He was just like, "There's no way this is going to happen here." So 60%, it's down. It was closer to 75%. I am also getting progressively more bearish on that, but the market just hasn't really minded, right? We're still in a situation.
Well, again, the context, though, right? Like, I mean, I'm looking at my PA, and I kind of just buy and hold. I don't have time to be trading. Jeez, man. I mean, it is painful. It is extremely painful. So, like, to say that the market's holding up, I mean, I wouldn't call it that, right? Like,
yeah. To be fair, I think when you came on, maybe ETH was
like 3,200.
Bitcoin was close to 90K. Yeah, we're holding on. Let's say for the next cycle. I'm still of the view here that we could be in for a little bit more sideways action. I lost out on the 4-year cycle debate, and now I'm kind of in the camp that they're just going to be right, and we're going to be a Q3 rally. So I'm very wary of getting over my skis on anything, but I do think there are certain things which, when something hits mainstream during a crypto bear market, then that can be a really good case. So that's why I keep on looking at hype and being like, this is like the NFTs. This is like the
something funny too. You mentioned like NFTs, but if you look at physical collectibles, they're kind of going crazy.
Yeah.
Which in like my own personal macro backdrop, where I think people are like tightening their belts, and obviously mortgage rates are back up to the highs of this administration's term. Gas is obviously back up to the highs. Employment is just a disaster. But then you see stuff like Pokemon cards and like memorabilia kind of doing their thing. Like back in like early 2021. That's actually quite shocking to me. And I don't know if it's finally like the whole financial nihilism taking care of. I mean, it really becoming like the Gen Z escape, the permanent underclass mentality. People are YOLOing everything. Could be. But it's just like stocks being boomer, obviously having 3 weeks of downside versus Pokemon cards doubling or tripling over the same period. It's super interesting. I think overall, next couple of weeks, if we do continue rallying in crypto, I am finally going to take some off the table just because it was painful to hold down to like 1,400. I do think the transmission mechanism between what's happening in the Middle East and then the real economy is tough. My wife still works in Wall Street. She works for a bit of like a private credit / hedge fund, and just telling me a broad scale, the margin impacts that a lot of the companies that they are talking to, with not just the year of tariffs that we had, obviously those are being turned back, but that already had an impact on business. But now with this oil shock, and you and I know it's not like the gas price, obviously that the pump changes, but then stuff like really takes a while. I'm seeing it with my personal spending. I have to go to Texas twice in like a month. And I didn't book the flights because I don't want to like hold myself to it. They're up $200 from what they were. They're like 400, now they're 600. So you do that twice, that's $400 extra. That luckily it doesn't really make much of a difference. But now it's $400 that I'm not spending on maybe like a date night with her or something else, or just buying more crypto. So yeah, I think the next couple of weeks could just be like, if we do continue to rally on the crypto side, could be an opportunity to maybe take some chips off the table for people that are getting ready for tax season. It's another one that always sees weakness in the crypto market. Year end, as people try to farm tax losses, and then going into mid and late April with tax season coming up. And so yeah, I'm a little more cautious this time around.
Separately, I mean, we weren't going to talk about this, but like, obviously, have seen this flare up in private credit. Like one bit that a lot of people are going, oh my god, it's so horrific. Like redemptions on all these major funds, and people saying, this could be the next big thing. What's your view on that?
So, I mean, I just feel, and again, most of the stuff is just smart conversations that I'm very lucky to have at home. But it feels like a typical thing, very late stage capitalism where things got really extended. A lot of banks looking for that extra risk. The regulatory environment got a little more friendly. And this, you traded, high yield and special situations, like that stuff gets marked by appointment. And very few people want to mark down their stuff because that's what your P&L comes from, and that's what your bonus comes from. So I lived the mortgage crisis in 2007 as a college student that was helping realtors in San Antonio translate their services to Mexicans that were buying houses in like the northern part of San Antonio. And I remember seeing the business and being like, well, there's no incentive for anybody to actually tell you the correct value of the house, right? Appraisers make money as a commission on the value of the transaction. The insurance guys, same thing. The realtors, same thing. The loan officers, same thing. So the higher the houses were priced, the more that everybody in the chain made. And I almost feel like, that happens to humans a lot. We've seen it many times. And so, yeah, it's very liquid markets where the marks are made by appointment, zero incentive for anybody to mark them down. Why? Because one, you don't get paid. I mean, it's not crazy to me that this whole Blue Owl stuff situation, even though, some in the financial media and commentators have been pointing to Blue Owl for, 9 months, it happened right after, we closed 2025, because then those books are marked, people get paid.
Yeah.
And now you see what's happening, right? Like, okay, well, obviously you hold withdrawals because there's no liquidity to sell the stuff. And it's just this chain of events that again, it points to me in the direction where people just got maybe a little bit too long on the tooth, and the sauce stopped rolling. And so, yeah, here comes the moment where just things go back to where they should be.
Yeah, I'm completely in agreement. I mean, and it was known, like in credit markets, it was known that private credit were doing deals at just the wrong level, and because it was not marked to market, it was just like 5 years time's problem. Like when the loan comes due, like I saw this so many different times where a private credit fund would come in and take like the second lien piece, or maybe just refinance the whole cap structure at a level where it was just like, this cannot end well.
Like stupid, like the level. That's what Mrs. Silva would say. It's like, that was just like stupid. You have no idea how stupid so many people out there are being. And so, yeah, that was a takeaway.
This is about 5 years from that time. So it's like that's kind of when all these are becoming due, a lot of these loans as well, or maybe they refinanced after COVID.
And again, rates are higher than they were over the last, 15 years now, whatever. Like, it's been a while since, like, and obviously we had bad rates a couple of years ago with the inflation scare, but like, I feel like, to your point, right? Like, all these loans, the trades get positioned in a way where you're taking a view on where rates are also going to be in 3 years, 4 years.
That's why they came in. They came in just before, like, at the end of the QE cycle, right? And then it was everything shifted. But then I also don't think it's as big. Like, you talk about 2008 and the size and the derivatives.
That's not 2008 big. You're right.
Yeah,
I think there was a lot of stuff that, like, guardrails that got placed there.
Yeah, people get mixed up with the scale. Like that, the US housing market plus derivatives market at that time was in the top 3 markets in the whole world. Private credit is like a $1 to $2 trillion market, which sounds big, but it's not. It's not actually. It's
right.
It's medium.
Yeah, and then you put it in context of the wealth creation from the stock market alongside it over the last that same time period. And so, yeah, even if it should be a small part of the portfolio of people that hold this. Obviously, a couple of funds maybe are bigger and so on, but yeah, I feel like it would be contained. Famous last words, right?
Yeah, well, we'll find out if it takes time.
Narratives are the problem, I think. Right?
Narratives are the problem.
People start freaking out, then that's different.
Yeah. Okay, I think we will go to questions just before we come in. 1 second. Sorry. Questions from the audience. When you have a sense that Bitcoin has solidified and ready to move upward, how are you positioning yourself to maximize gains, take on risk? In brackets, altcoins, NFTs, memes, ? So it's a good question, because I do think that when a bull market starts, or we do start to see a bull trend, you kind of have to throw the educated investor in the bin, and things can go pretty wild down the stack of different altcoins. Right now, I got kind of caught trying to trade the breakout. What was it, a week ago, maybe? I got long at 71K, and I was like, right, this is going to be the breakout. We broke up to 74K, and I thought I was a genius, and then ended up cutting it at 70K, and I was really annoyed at myself. But that trade cost me 1.5%. I was like, right, I just got annoyed at myself because I thought it was a breakout and it wasn't. I'm still on the first point. I don't really think we're yet we're in a breakout stage. Like we just got rejected again. It looks like from that same sort of level, and it looks to me a lot like still the range that we had in 2024, where we touched around this level. I think it was over 10 times. So I would wait for a cleaner breakout here now, just because I've been burnt too many times. After that, though, normally I would go down the L1 route, but I think if I was to pick one coin I'd buy for a breakout in markets right now, it would probably be Pump. Because for me, the reason why Hyperliquid trades at its multiple of earnings versus Pump is because people kind of see Pump's business model as somewhat fading, even though its volume's been pretty consistent. And in a breakout for Bitcoin, I think that people would be like, right, we're going to do left curve stuff all over again. And Pump, as we've just said, they did $1 billion over the last year in revenue. I think fees was less than that, maybe about 50% of that, but still, like, it trades at about 4 times its buyback at the moment. And if we go back up to like 80, 90K, I think Pump does a 2x.
I agree with that. Again, I think the buyback is powerful in the bull market, and it's a good dampen in a bear market. And the team has, obviously they know what they're doing. Some misses on product, the streaming and so on, but like to build that type of platform with that stickiness, that resiliency that's something that can be replicated easily, and many try, but they definitely have that brand where you want to, if you're going to participate in meme coins, you want to participate in the Pump ecosystem meme coins. So yeah, if I really were to it's a great quote, left curve stuff, I think Pump token is good. I wouldn't touch the memes themselves, but I would definitely try to trade the Pump coin.
Yeah, I think that's a clean one. Or Rekt, buy some Rekt.
We like the Rekt.
Okay, with real world assets going on chain now, such as gold, does it challenge the traditional narrative for Bitcoin? Could this now take the digital gold market share taken by Bitcoin? So there's been interesting stats that overseeing what has been being traded on things like Hyperliquid. If you go into Hyperliquid right now, a lot of the most traded things now are no longer altcoins. It's gold, it's the S&P, it's Tesla stock, it's traditional assets which have been tokenized and you can now trade them. Bitcoin is still number one, so that does say quite a lot. And I would say that gold has always had a tradable asset via the ETFs, or for a long time it's had a tradable asset via the ETFs. So I don't necessarily see them as like competing against each other that much, just in terms of trade, at least Bitcoin. I do think that altcoins are having their lunch kind of taken from them slightly here. And there's no doubt you're seeing weakness in the long tail of coins, except for when there's like excessive crime, because people are just preferring to trade stocks, it feels like, on chain, or like other assets on chain.
Yeah, I think I mentioned earlier, right? I think people are waking up to realization that most altcoins are just funding vehicles for teams, early investors, and so on. So would you rather trade something like an RWA or tokenized gold, or just Ether, Solana? Well, Solana still has selling, but like Bitcoin, versus somewhere where the team still holds 20% of the supply, and every single rally they are incentivized, and it's probably their fiduciary duty to their investors, to their equity investors, to sit on the offer and sell it. That's my take on altcoins, probably going forward, until like the structure of altcoins changes. You have a structural seller in the market, is just, it like volatility. I used to do volatility at Barclays, and it was like damped for years, because you had all these people just selling weekly variants, and then all the structured vol sellers nonstop, and vol could never move. So same thing. Well, obviously, volatility has an inverse correlation to spot performance and so on. But the fact that you have like a structural seller, a large structural seller, in most cases, the largest holder sitting on the offer, it's going to give you less of that convexity that I think people are looking to get from altcoins. And so, yeah, that takes away their appeal.
Yeah, I agree. Like, this is just accelerated bad coins trading worse. I think that's some of the worst idea, as we going back to that original point of which things to own as you come out. You've got to know which coins are consolidating and which have just been getting decimated, I think, through a period like this. So, like, although pump is down, it still feels like the sort of coin that would bounce. Whereas if you were to buy random altcoin, which is in the top 200, I think that can be very, very different as a dynamic. So I think, yeah, it's fair to say that crypto is definitely in a more competitive landscape right now. But it doesn't mean necessarily they're all going to be terrible. And I think Bitcoin will remain a digital gold, even with gold coming on chain. Okay, I think that's it. I think that's it for the questions. But Sergio, it's an absolute pleasure having you on. As always, we can go everywhere with you, which I love. And yeah, hopefully see you again relatively soon, and we can talk maybe a bit more about Meebit and
I'm always here. Well, excited for
this week.
We're excited for the World Cup, and I think England is predicted to. It's like the second highest odds on Polymarket. Yeah. Honestly, will make me very happy to see it come home finally.
Yeah,
for all of y'all. Yeah,
don't do it to me.
It would make me really, really happy. But yeah, no, we're looking forward to all the stuff that's happening in NFT land with what we're doing with football and so on. So yeah, happy to come back at any time to chat about that as we get closer.
Awesome. All right. Well, you know where to find him. Obviously, Sergito on X, and follow everything he's doing with Meebits. Is a really cool project if you don't know about it. All right, guys. Well, we will see you again next week, and same time. All the best.
Moments. They have the power to change everything. The moments we try something new. The moments we travel thousands of miles. In seconds. The ones that transform how we spend, how we save, how we build. The moments we connect and create memories that last a lifetime. The moments 300 million people say in unison, we want a better way. But the moments that really matter are the ones that come next.